So we've gotten a lot of questions about our profit tracking spreadsheet that we've got right here. It makes appearances in a lot of our videos. We share it a lot when we update you guys with the progress that we've made. Basically, it consists of week-to-week tracking. We have that summarized in our yearly tracker where we have our weekly profit and losses summarized, our account balance progress, our monthly progress, and then we chart our account balance and our performance against the S&P 500, which we use to benchmark. Additionally, we also break out all of our individual trades here on different tabs so we can keep track of different break-even prices and profit on individual trades and all of the different pieces of trades, as sometimes these things can take multiple weeks or months. For example, if we look at GHIV, we've had this one going for a while, and if you have this many trades on a stock, it's easy to lose track of where you stand on something. So that's why we create these breakout tabs. But we get a lot of questions about, how can I make one of these myself? Do you have a template? How does this work? So in this video, we're going to walk you through how to make exactly this profit tracker from scratch. Welcome back to the Hourglass Trader, where as time passes, we make money. All right, so to kick it off, we're going to do this via Google Sheets, since that's the easiest way for us to share this with you guys publicly, but every piece of advice that we give in here is equally applicable to Microsoft Excel users as well. So if you've got Excel, pop open a blank spreadsheet. If you're going to use Google Sheets along with us when you follow along, just go to the Google Sheets website, pop open a brand new one, and we can get started. We are going to name this Profit Tracker Example. So I think the best way to start here is just to outline what we know that we're going to have in here. So we know there's going to be one tab that tracks our weekly progress. We'll call this Weekly Tracker. We know we're going to have another tab in here that we're going to add that's going to track our yearly progress. So we're going to call this Yearly Summary. And then we're going to have individual trade breakout tabs. So we can call this maybe Stock A Breakout. We'll add another for Stock B Breakout. And then maybe we'll do one more for the purposes of this example, and we'll call that Stock C Breakout. Perfect. So now that we are back to the first tab in here, the Weekly Tracker tab, let's think about how we want this to look. With the way we have ours set up, we have account balance in the top left corner. We're going to leave this blank for now and just start to build the skeleton of what this looks like before actually populating numbers. We then have year-to-date profit right here. Year-to-date average weekly return. And then if we go over here, we also have year-to-date return expressed as a percentage. And then we also like to track our wheel profits versus our spread profits year-to-date. Since those are the two main strategies we use are the HT wheel and the spreads that we like to sell to hedge those positions. So I think it is important in the context of evaluating your strategy, evaluating how you're doing on a week-to-week, month-to-month, and yearly basis, seeing that breakdown between profits on both of those different strategies. That's something we like to have up here for quick reference. Okay, so now that we've got that, what I do in mine is I make the first 3 rows of mine a header. So what we do to, distinguish that header is we lightly shade it. I think I've got this color right here, maybe one shade lighter than that. And starting at row 3, we're going to click View, Freeze, up to the current row, the 3rd row. This way, when we scroll through the document, this header right here and the information that we want to see quickly is always going to be visible and won't be hidden by us scrolling. If you're on Microsoft Excel, I believe the shortcut to do that is Alt-WFF once you highlight row 3, and that'll do the same thing for those of you who are in Excel doing this. So let's start as if we were doing this at the very beginning of the year. Let's call this week of January 3rd. We'll call this 1-3. We like to put that in column A for a couple of reasons. The first, let me actually pull over my actual one so you could see what I'm looking at here. The first is that it helps us segment our weekly tracking by date. And the other thing is if we hold down Control and then hit the arrow keys, we could quickly jump between different weeks. And that makes it really easy if you're trying to go through and evaluate how your plays have looked on the year. It's easy to jump week by week by just holding down Control and hitting up or down on the arrows to jump from week to week. So that is why we do that, and only that in this A column right here. So let me pull this back off the screen and we can get back into finishing up the first part of making this profit tracking spreadsheet. So this is the most important part right here. This is where we're actually going to track our week-to-week plays. So we're going to start with amount, and this is just the quantity of, either puts we've sold or shares that we own. We're going to say position right here, and I spelled that wrong. That's impressive. This is just a description of the position that we're holding. Credit to open, since we're selling options, and if we have a stock, this is just the price that we purchased the stock at. If we sold a put, sold a call, this is the actual credit to open, but since we also hold stock as part of this strategy, this would also be the share price that we purchased the stock at. And now we have debit to close, and those are going to result in our profit or loss on the trade. So that is our header right there. In order to, keep that separate and distinguish that as a header, we're going to lightly shade this color gray. And we're going to make this bold just so that it stands out a little bit better as a header. So now let's fill in a few hypothetical positions. Let's say we sold 10, and if we're selling options, we want to remember that we're going to have a negative number here. Always important to have a negative number if you're selling options. And let's just say we sold something like an AMD 80 strike put that expires on April the 30th. That would be our position descriptor, and we can make this a little bit wider because sometimes these positions need a little bit more room to describe what exactly they are. And let's say we sold this for, I don't know, $1.50, and we don't know what our debit to close right now is going to be. So we're just going to put that also in as $1.50, and we are going to highlight this yellow to indicate that the position is open. And that's the other thing I like to have up here, is just maybe a reminder to yourself, indicates a position is open. So we're going to italicize that really quickly, just as a minor formatting thing. We're going to highlight that yellow. And this lets us know that if something is highlighted yellow, it indicates that a position is open. So our first hypothetical position that we're going to have here as we put this together is going to be an AMD 80 strike put, expires 4/30. We sold it for $1.50. It's still $1.50. So that's going to result in $0 so far of profit and loss. But I guess now the question is, what's the formula that we put here to properly calculate this? So it's going to equal parentheses, what we have in D, column D right here, so D6, minus what we have in column E, close parentheses, times what we have in column B, the quantity. So this is going to be the difference in premiums, times the quantity, and then we're going to multiply this by -100, because we know that an options contract gives you the right for 100 shares, and that when we sell something for $1.50 of premium, we're actually getting $150, thus the 100. And then we want to turn this number positive, because since we have a negative quantity here for the amount, we want to flip the sign. That's why it's -100. And that is the formula you put in for when you're selling puts, selling calls, any sort of option sale. So as we can see now, when we update this, if it goes up to 2, we're going to be losing money, right? We're down $500. If it goes down to 0, we'll hit our max profit of $1,500. But the point now is that we've put this formula in, so it's dynamic and changing when we update the prices here. So let's stick this back to $1.50, gets us to 0. And one other thing that I think is important that I want to do here, just for, ease of access and readability when you're looking at your tracker, we're going to highlight column F, and we're going to apply some conditional formatting. So to do that, you're going to go to Format, Conditional Formatting, and we're going to have 2 rules. The first is we're going to format this if it's greater than 0, meaning that in our profit and loss column here, if the number is bigger than 0, we want it to be shaded in green. So we're going to click add another rule, because we also want it, if it's less than 0, we want it to be red. We are going to do that like so, and then we will click done. And now those conditional formatting rules, as you could see in column F, if it's greater than 0, it's going to be highlighted green. If it's less than 0, it's going to be highlighted in red. So now when we put the closing price into here, for example, if we lost money, your profit and loss is going to be highlighted in red now. If we got a profit on it, it's not going to be highlighted in green. And that's just another thing we like to do to maybe automate and make it easier to read once we update the numbers in here. Some of this is manual, but we try to automate as much of this tracking spreadsheet as we can. And applying this kind of conditional formatting is just one good way to do that. So we'll throw this back at 150 and we'll go with our next, hypothetical position. So to do that, off the top of my head, let's say we purchased Apple shares. Let's say we purchased 100 shares of Apple. So that, again, that's going to be positive. We're going to call these AAPL shares. And let's say we bought them for $130. Actually, let's say 134. Let's make it a little bit closer to the actual price the day that we're filming this. So again, we've got the positive number there for the shares. We've got the description, the Apple shares, and we have the price that we purchased the shares at. Again, since we had the first row as an option sale, we want the credit that we sold it for. Now, it's a little bit misleading to have the credit to open column here, but for purposes of our calculations and adding this all up, what needs to go in this column, column D, when you purchase shares, is the price that you purchased those shares for. So the best part here is with Google Sheets, what you can do, and you could also do this in Microsoft Excel, but there's a great function here, equals Google Finance. And if you put a quotation mark, type in the ticker AAPL, close quotation, close the bracket, it's going to fetch the price of Apple stock for you. Now it tells, for some reason it told me there was an error, but that is the actual closing price as of yesterday at market close. And the great part about this function is that it's going to update the price for you as the day moves on. There's not a similar function, unfortunately, for options that you sell, so this has to be a little bit more manual. But when you have shares in here, that part of it is great because you're able to have that dynamically update and reflect your profit on that position in real time. We're also going to highlight this yellow again because it is an open position. And now we're going to look into what formula we write here. So the formula when you calculate your profit and loss on shares is going to be a little bit different than when you calculate it on options. So for shares, what you're going to do is open parentheses. We're going to go what's in column D minus what's in column E because that's going to indicate the change in value of the shares. We're going to multiply this by what's in column B, and instead of multiplying it by negative 100, we're just going to multiply it by negative 1. Since they're not options contracts, it's not 100 shares per contract, it's just straight up 100 shares, so we don't need to multiply by 100. So what we've got right there now is a $32 profit, and that's properly calculated because we purchased it at 134. It's now worth 134.32, which results in a $32 profit. And again, we could dynamically change this. If we drop to 125, we'd see we're sitting on a $900 loss. If it went up to 140, we'd be on a $600 gain. But ideally, we've got this Google Finance function working for us, so we don't even need to worry about updating that because it'll do it automatically. And now the second part of this, as we know, we don't ever like to just hold shares, so we're going to sell a covered call. So -1 for the covered call, Apple, and we'll call it just same expiration date, 4/30, and we'll sell maybe hypothetically a 136 call. And don't kill me here, I have no idea what these are trading for off the top of my head, but we'll just call it $1.50 again for ease in this example. And again, since nothing hypothetically, theoretically has moved here, we'll also put $1.50 in. We're going to want to highlight this yellow since it's an open position. Now here's another quick shortcut that's really important when you're adding positions, because the adding position part of this is pretty manual. But the great part about what we can do, since we already have the formula for an option in here, we could Control-C to copy, Control-V to paste, and it's going to give you the exact same formula except with these two instead of these two. And that's one of those great shortcuts that using a spreadsheet software like Google Sheets or Microsoft Excel provides us with. Again, the calculation is totally correct. If it goes down to 0, we've made 150 bucks on it. If it goes up to 2, we've lost 50. But that part is on you to dynamically update the prices of the options in here. Again, the stock will update, the options will not. So that is something that you are going to have to consider moving forward. So we'll call that our second hypothetical position, and then maybe one more hypothetical position. Let's say we sold 10 Zillow 430 131 puts for, let's say they were $2.10. And this is less of a hypothetical example. This is an actual trade that we made. So again, we know that we would put 2.1 right here. We would highlight it yellow because that position is open. And we would again copy down that formula. Now you notice I didn't Control-C, Control-V right here. What you can do if you've got something you want to copy directly to the cell below, hold down Shift, down arrow to select the one below it, and then Command or Control D, and that will do the same thing. It'll copy the formula down. We can see up in the formula bar when we move between rows 8 and 9 that it properly updated. And again, we can mess with this a little bit just to prove that it's correct. And there's our profit right there. There's potential loss. Again, the conditional formatting is highlighting it red or green based upon whether it's positive or negative. And there we go. That's our first little, I guess you could say, step in throwing this all together. So let's finish out the table right here by giving all of it borders. If you're on Excel, the shortcut for that is Alt-HBA, and in Google Sheets, I don't know any of the shortcuts, so you're gonna watch me do it with the mouse, which hopefully makes it a little bit easier to follow for you. But this is where we've got our 3 hypothetical positions right here, and our share is showing a little bit of a gain just because that's higher than what we hypothetically bought it for based upon the price that it's fetching from the Google Finance function. So what we'll do now is we'll put a weekly profit row in here, and that's going to equal the sum, of all the rows above it. So right now it's at 32, and we could format this as a dollar amount by clicking that and then making it a whole number by taking out the decimal places. And we're also going to want to bold that so it stands out a little bit more in what we're looking at. And then one thing that you've got to keep in mind is that you might have a $32 weekly profit on these, but these, assuming you're not using a Robinhood or another broker with no commission, if you are, you could ignore this step, but we use TD Ameritrade, so there's a little bit of commission that's going to be involved in opening these positions. So we're going to want to include that under a commissions line. We're going to want to make this text red so it's very clear to us that this is deducting from the profit that we have. And this is one that you're going to need to manually fill in as well. So let's just say the commission on these trades was $10, so we'll put a -10 in there. Again, we'll format this as a dollar amount, take out the decimals, and that'll get us down to our net profit amount. And that's going to equal the sum of the 2 rows above it to give us $22 of net profit. We're going to bold that amount. And at a very high level, this is how we start to build the weekly tracker. That's our net profit as the week changes. You know, let's say we hit max profit on these 2 positions. We then would have $3,600 of weekly profit, and that updates automatically by pulling everything through the formulas to the right and then summing it up down below. And we can back those out really quickly. And that's really just the building block of how the rest of this is going to work. Now we still have all this we've got to fill in. We still have the yearly summary we got to get to, and we still have the trade breakouts that I want to show you guys how to throw together. But there are a couple more things that we need to add right here. The first is that breakout between the wheel profits and the spread profits. So what I'll put right here is profit from HT wheel, and then I'll also put profit from spreads. And we're going to want to align these right so that the cells aren't bleeding over into the other ones. And this is another part that's going to be relatively manual. Now we know we don't have any spreads listed right here, so our profit from the HT wheel is just going to be the sum of the entire thing. And since there are no spreads, that's pretty much it. We're going to want to leave this one blank. We'll throw a 0 in there. And then we're going to want to have a thing right here that says all plays accounted for ? And again, we're going to want to align that one to the right. And what this does is essentially let us know, hey, since we're trying to break out our profit here between the wheel and spreads, did we successfully do that? It's essentially a check to let us know if we inputted these 2 cells properly. And the way we're going to want to do that is an if statement. And if we're going to do if what's in this cell, C11, plus this cell equals the weekly profit right here. So if our breakout between the HT wheel profit and the spreads profit equals our weekly profit, then we know we've done it correct. So comma, you're going to want to put quotation mark, and that's going to return a value that says yes. But if not, it's going to return a value, quotation mark again, that says no. And we know that since we have $32 of weekly profit, we've got that broken out here. We know all plays are accounted for. We like to center that a little bit to make it more readable. And again, we're going to want to apply that same conditional formatting in this row. So again, we do that by going to format, conditional formatting, format cells. If greater than 0, we want it green. Add another rule. If it's less than 0, we want it red. I believe this was the red that I used before. And now we'll see that that conditional formatting has applied right here. We're going to format that as a whole dollar amount and take out the decimal places. Whoops, wrong way. All right, so that's our breakout right there of profit from HT wheel, profit from spreads. And now down here, there's maybe 2 more things that we want to consider. The first is going to be our weekly return, which I like to put right here. I call it our return, and that is going to equal your net profit divided by your account balance that week. Now, you'll notice that for this formula, I'm putting A2. What's important is that you actually hard code this account balance in there. So if you had $10,000 going into the week, type in 10, 1, 2, 3. The reason being is that, one second, we need to also format this as a percentage or else you're gonna get a 0 value right there. The reason we wanna hard code this in here is because as we add as we add different weeks, once we go to 110, 117 and have more and more of these stacked on top of each other, our account balance is gonna change. So let's say that, we made 1.72% this week, and that took our account balance up to $10,172. Now it's a 1.72% return because it's being divided by 10,000. But if we had the denominator linking up here, it would then be dividing it by 10,172. The idea being, as you get further and further into the year, that account balance ideally is going to be going up, and that's going to change the denominator, which will change your return on a weekly basis. So again, divided by 10,000, and we could demonstrate that by actually doing this here, A2. Let's say we had 10,000. You have a 1.72% return that week. No matter what happens, you made 1.72% that week. But let's say later in the year, you now have $30,000. Your return is now 0.57%, and that's just not correct. So what we want to do is divide it by the actual amount of money that you have. Hard-coded 1.72%, and that way, as your account balance is updating, this is going to remain the same. So, and then the one last thing, actually really quickly, let's put an outside border on that. Let's center this, and that'll show us our return right there. And then the other important thing that we like to do before getting into what's going on up here is compare our performance against the S&P 500. So what I like to do right here is the S&P 500, we use the ETF SPY. So this price of SPY at the beginning of the week, and then SPY end of week. And let's just say it started the week at, 410. That's going to be hard coded in there. And this is another place where we can use that Google Finance function to dynamically bring in the price of SPY. And since 410 is pretty far away, let's actually put something like 417 in, just so it's not as misleading. We're going to put a bottom border on this since we are about to pull a percentage. And then we are going to calculate the percent change in the S&P 500 during the week. And we're going to do that by parentheses this minus this to give us the change during the week. And then divide that by the initial amount to give us the percent change during the week. And again, we're going to want to express that as a percentage. So there we go. It went down 0.06%. This is one we're not going to be able to conditionally format because if we did the whole column, it would also format these amounts right here. But what I like to do is just I'll manually go in there and say, okay, this was red on the week. And then at the very bottom right here, we're going to compare our return to the S&P 500 index. So we're going to put return vs SPY, and that is going to equal our return minus the S&P 500 return, which means we outperformed this week by 1.78%. And at the core of everything that we're doing, this entire strategy that we're running, this is what we're going for right here. If this amount is green, that means we did our job that week. That's so important. We are going to throw it in bold right there. And to further finish this up, we're going to label this SPY weekly return, bold these two. And that is what we like to have below our header. That's how things are going to look every week. If you have a play that you want to add, highlight the row, insert a row, you could add it right in there. Let's say we sold 10 of something else for $2 again. And we would just copy the formula down. That would copy across, and then it's pulled into our weekly profit like so. It's that simple when you add a new play during the week. But since we're only using 3, we'll Control Z back out of that and continue forward with the example that we're working with. So right here, just so we've got a little bit of profit showing, we're going to have this at 0. We've got 172 weekly profit. It properly calculates off our $10,000 account balance that we have made 1.72%. And we are going to move forward from that and talk about what we're going to put in our header. So the first thing we're going to want to put right here is our year-to-date profit. And the way that we do that is going to be with what's called a sum-if formula. So we'll put sum-if, parentheses, if column E through E. So what this says is, okay, if something in this column, comma, says net profit, and we know you can't see it behind this thing, but our net profit line, actually, I can click X on that. So what this formula is doing is it's looking at column E and saying, okay, if it says net profit, then I want to sum up everything to the right of it. So we'll click comma and sum up column F because that's immediately to the right. So in plain English, this is looking in column E. If there's a cell that says net profit, it'll say, okay, I see net profit right there, and I'm going to add this amount. And we're going to close parentheses because that's the extent of the formula. That'll calculate that properly. We're going to bold that. We're going to center it to make it easier to read. And we're, again, going to format this as a dollar amount. So just to show you how this would, further continue, if you copied and pasted this below for your next week and you had a row that said net profit and you made, $500 on it, $500 net profit gets pulled up here by that formula, take it out, it goes away. And that's how that works on a week over week basis. So that's why it's important to have that sum if formula so that pulls in the entirety of your profit. The next we could do the weekly average return right here. And that's just going to equal the average of what's in column G. And as you can see, that needs to be formatted as a percentage, but it reflects the 1.72%. We again are going to center this. We're going to bold it. And we're going to conditionally format, actually, let's conditionally format this entire row right here with the same rules. So format, conditional formatting for row 2 here. Perfect. So if it's greater than 0, we want it to be green. And if it's less than 0, we want it to be red. And that should format these all properly. Let me test this with the negative number. Perfect. That one works. So the next thing that we're going to look at here is the year-to-date return percentage. And in fact, let's just throw 10,000 in there as our account balance. So 10,000 is our account balance. Let's do this one right now. And we know since that's our starting position, that's our initial account balance. And how do we get that to change during the year? The answer is relatively simple. We're going to turn this into a function where it equals 10,000 plus the yearly profits right here. So we know that this is updating automatically, and this is updating based off of this. Let me quickly bold and center this and make this a little bit bigger so it's not getting cut off. But again, if we have another week of net profit, and again, looking back here to see how this formula works, it's 10,172. If we make $500 in net profit the next week, this is going to update, which is going to update this to get us to 10,672. And that's how all these formulas are working together, pulling from each other to update automatically as you just do your job and update what's down here. So let me delete that out. Again, we can see that returns to 172. And now we could calculate our year-to-date return. And that is going to equal your current account balance minus your initial account balance of 10,123 divided by that initial account balance of $10,000 for a year-to-date return percentage of 1.72%. Again, we're going to want to center and bold that. Make it a little bit wider so it's not getting cut off. And now if you'll remember what we just did for our year-to-date profit with the sum-if formula, where it basically sums up everything that says net profit, we're going to write a very similar formula right here for our wheel profits year-to-date. So equals sum-if, and that's going to be the condition. So if B through B says profit from HT wheel, and again, that's the exact label that we have right here. then I want to sum, so put a comma, C through C. So what happens when we hit enter? This should give us the 182. Perfect. Gonna bold, center, and format as a dollar amount and take out the decimals. And we're gonna do the exact same thing for our spreads profit year to date. Sum if B through B equals profit, excuse me, forgot the comma right there. Profit from spreads. Then we're gonna sum up C through C, column C. And that should give us that $0 right there. We're gonna bold it, we are gonna center it, and we are gonna format this again as a dollar amount. So there you have it. That is how you set up the very first tab in this, the weekly tracker. And just, you know, I like to have things color coded. I'm gonna put this as light green to differentiate eventually what we have in a tracker between what we have as our individual stock breakouts. So let's actually not go to the yearly summary yet. Let's go to our individual stock breakouts and talk about how we are going to throw those together. So here we are again with a completely blank slate, and going back to the weekly tracker, that first trade we had was AMD 80 strike put 430. So we're going to rename this and call this AMD trade breakout. So what I like to have up here is weeks, because this is the amount of weeks that the play takes, and we're going to fill this in later. We're going to say started at increase slash decrease, meaning the increase or decrease in the price of the stock during the period. We're going to have our return on capital right here, and then we're going to have the ticker. So we're going to put AMD right there. And let's make these all a little bit wider just so we could read them as we go through and do this. And just for maybe some increased readability, I'm going to zoom in a little bit for you guys so you could hopefully see it a little bit better right here. So AMD, we'll say it started at, you know, $82. The current price, we're going to use that Google Finance function again, AMD. And actually, to make this dynamic, we would normally put AMD, but what we could actually do right here is just reference the cell right above it, since that says AMD, and it's going to pull the price for you right there. So now we have the price it started at, we have the current price, and again, we like to center these just so they're on top of each other, a little bit easier to read. And we know we can now calculate the increase or decrease. So that's going to equal, excuse me, open parentheses, current price minus the beginning price divided by the beginning price, meaning that we've got a, you know, just under 1% increase in the stock. We are going to format that as a percentage. And then this is going to be calculated in a minute. But what we're going to build out down here is almost identical to what we have in the weekly tracker. We're going to want amount, position, credit to open, debit to close, and profit or loss. And again, we could bold these, we could shade them to indicate that they're headers, and we will give them borders to separate the sections. So if we go back to the weekly tracker, we could look at what we did here. We sold 10 AMD 80 strike puts. So minus 10 AMD 430 80p. And again, this position column right here isn't being pulled in by a formula, so it's more just to tell you what's happening here. And our credit to open there was $1.50. So we'll put $1.50. The position is open, so we're going to highlight this yellow. And normally we would manually update it from the weekly tracker, but one thing I actually like to do here, just to make this a little bit more dynamic, because we know this is going to be updating automatically, so we can use the information from this to update this. So what do we know about an 80 strike put if AMD finishes at 82.76? We know that that put is going to finish out of the money, and this is going to be worthless. So we could actually write a little bit of a formula here that essentially strips the extrinsic value out of the option and shows you what the price of the option would be at expiry. And to do that, we're going to do max. 80 is the strike, so we're going to type in 80 minus the current price, comma, 0. And what that's doing is saying, okay, I want this value to be the greater of either 0 to ensure that it's not a negative, because options can never go negative, or 80 minus the current price, which is what the intrinsic value of it would be if it were in the money. But we know it's out of the money, so when we hit enter right here, it's going to show 0. And instead of retyping this profit or loss formula, we could actually just jump back into the weekly tracker since it's formatted the same. Go into that cell, Control C for copy, Control V for paste, and we'll see that that's $1,500 of profit. So we could turn this into a table, and I like to leave a few additional cells down here just in case as the play progresses you want to add some more. And I've also got a notes column out here. It's just to, keep some notes to myself, let myself know why I entered certain plays, when I entered certain plays. But we could say we sold puts on 4/23. This typically needs to be a little bit wider because sometimes the notes can get a little bit lengthier. But I like to shade this notes column gray and make it bold. So that's what that looks like right there. And I like to also number these, because if you open another position and you roll them down, right, I could say, okay, I rolled these to what's happening on row 2. And sometimes it can get pretty convoluted. It doesn't look like it might be necessary with what we have right here, but if you go to my actual tracker and we go to something like, let's go to this GHIV trade, it gets very, very complicated. So I let myself know, okay, this might have been closed for a loss, but I rolled it down to 14 where it was a gain. So you could look at these two trades together and say, okay, I lost 520 right here, but I made 882. So all in all, what happened here, the net effect was a gain. And as you can see, there are several references to other rows. And once you are in a position for anything longer than a week or two, it can be very helpful. So that's why we have it in there. But let's get back to what we have going right now. We're going to put the total profit on the trade here, and that's going to equal the sum of everything that's above it, of course. We're going to want to bold that. We're going to format it as a dollar amount again and put some borders on it so it becomes part of the table right here. Now what we're going to add right here is something that I think is relatively important in columns J and K. We're going to have the start date of the trade and the end date of the trade. So hypothetically, we would have started this yesterday, 4/23/21, and these expire on 4/30, so 4/30/21. And again, I like to, bold the headers, center the entire thing so that it looks a little bit less messy, and then put an outside border on it just to have it sitting up there. And we like to highlight this yellow to remind ourselves that the play is still open, and that's going to give us the length of the play, right? So what we could do here is put equals the ending date minus the starting date. Now what that's going to do is give us weeks, right? But we don't, it's going to give us days, but what we want is weeks. We're going to take this entire amount and divide it by 7, since that's how many days obviously are in a week. And I think you guys hopefully knew that one before jumping into this video. So that'll tell us we've had this trade open for 1 week. We could center that, make this a little bit less intrusive over here by making the column smaller. And now that just leaves us with a couple other bits and pieces of information that we need to fill in. So what we're going to put right here is collateral. And this is the amount of collateral that we need to open the trade. So typically, if you sell an 80 strike put, it would equal 80, which is the strike, times 10, since we sold 10 of them, and then times 100, since there are 100 shares, and that would be 80,000 of collateral. But what we've been doing lately is using our margin requirements, because while it would require $80,000 if this was fully cash secured, in reality, our broker lets us sell one of these for only $2,000 of collateral. So we can go look at the actual margin requirements, and this part's up to you. If you want to calculate this as fully cash secured, that is completely your prerogative, and there's nothing wrong with doing it in that manner. But the way we're going to start doing it is with, the actual collateral. So we've sold 10 of these, and I think the actual number is 2250 that was required. So really, we only needed 22,500 of collateral to start this trade. Again, we're going to bold that header right there. So now that makes calculating our return on capital a lot easier, because we know that our return on capital is just going to be our profit divided by the amount of collateral that we needed to open the trade. So again, formatting this as a percentage, that's going to give us a 6.67% return on capital. One last thing we like to do, if you've been following along, is conditional formatting, where if it's greater than 0, we're going to have it green. And if it is less than 0, we are going to have it in red. In red. There we go. Just how to say it a little bit louder. So we've got a positive return right here. We've just off that one position. We have this updating automatically, and we're going to keep this Google Finance function right here. But just to show you how this formula right here works, you know, if AMD dropped to 79, we know that an 80 strike put would be in the money by $1, so it'd be worth $1 at close. And if we hit enter, we can see that that updates automatically. We're showing an increase, we'll show a decrease in the stock for the time being, but we know that we've made money on the put that we sold, and that's reflected right here. But let me undo that just so we can have the actual price being fetched. And I like to bold these two because they're probably the two more important metrics that we like to look at when we're doing this. And that leaves us with one final thing, which is something that's so important in the context of our overall strategy, and that's our break-even price. So what I like to set up right here is a break-even price tracker. So we're going to put total reduction at the top. We're going to put B/E price tracker right here. We are going to merge these cells. We're going to bold them. We're going to center this. We're going to put date. And then we're going to also put B/E for our break-even price. So what I like to do right here on this very first row, I'm going to highlight this gray because we're not going to want to manually touch this one. But on 4/23, when we open the trade, AMD, we're going to link this, was trading at $82 a share. So this is the stock beginning price. Now, right when we open this trade, we give ourselves a new break-even price. So I'm going to illustrate that by putting 4/23 and our new break-even price. So we know on an 80 strike put that our break-even price is going to equal 80, the strike of the put, minus the amount of premium we've got, 1.5, which now gives us a 78.5 break-even price. And we're going to label this initial B/E. And now up here in our total reduction, we're going to calculate just how far we've driven down our break-even price compared to when we started, when the trade was at $82 a share. So to do that, we are going to equals, open parentheses, this cell minus this cell, because that represents the drop in our break-even price. And we're going to divide it by the initial price again to give us that percentage. Hit enter, format as a percentage. And as you can see off the bat, we've reduced our break-even price by 4.27%. And this is really just the money maker for our strategy. The fact that we're able to reduce our break-even price by this much off the bat, give ourselves a cushion when we trade. But that's why it's so important when we set this all up. And again, let's say AMD finished at 79. These got closed out for $1, right? We would then just sell 10 more AMD. We'll call it 5.5. I don't know if that's the date, but let's say these we're now selling for 2. We could make the same formula where we would do equals max 80 minus the current price, comma 0. Copy this down, and then this gets dragged in. We would have to update the end date to be like 5.5, and then we would have our return on capital updated, the increase or decrease in the stock is updated, and then to come up with our break-even price, let's say hypothetically we did this on 4:30. I think sometimes the easiest way to do this, and feel free to correct me because I'm sure there's an easier way, sometimes the easiest way to do it is actually just put numbers in until you come up with a number that is 0. So we'll know just by updating this number right here that our break-even price is now 77.5, and we're going to have to update this to subtract K9, and we'll know that our break-even price has been reduced by 5.49% at that point. So long story short, what you're doing on these tabs manually is you're going to want to update any new trades you add. You're going to want to update the collateral, update the start and end dates, update your break-even price tracker, and then update the formula for reduction to keep pulling in the newest break-even price when you're calculating that total reduction overall. But completely backing up a little bit to the way we had it looking before. This is what it should look like when you are done and have inputted the trade on your individual trade breakout tab. And then, the same thing for if we're going to do the Apple one, right? you would just write shares, you'd go back to your weekly tracker, you'd copy and paste in the formula for shares, you'd copy and paste in the formula for the covered calls that you sold, and you would just keep it rolling, adding more and more rows as the trade progresses, and then updating your break-even price tracker as it gets further and further down. So that really leaves us with one individual thing, and that is finishing up our yearly summary. And going back in the theme of color coding, I like to make these orange just to distinguish that, these are my trade breakout tabs versus the actual yearly and weekly summary tabs. So that's how that would look. And let's get back into the summary tab. We're going to make it green to match the weekly tracker. And now let's get into how we could go from this blank page to having something that looks like what we have in our tracker, where we have a nicely summarized yearly performance chart that shows our week performance, our yearly account balance, our monthly summary, and gives us these nice two charts that we could quickly look at to see how we've been performing against the S&P 500 index and how our account balance has looked during the year. So to expedite this a little bit, since we only have 1 week of data, the charts wouldn't really look that great. So it's not the most helpful thing in the world to use what we've got right here. But what we can do is, copy and paste in the values from my account so far this year. So that's what we're going to do just to make this video a little bit easier and have those charts actually look like they're showing something when we paste this all in right here. So since we've got the values right here, we're going to go through, format this again. We're going to make this bold. We're going to want to center these items. And that's going to apply to this entire column. Make those bold. Make that a little bit wider so we could actually read the header itself. I promise I would be able to do this a little bit quicker in Excel, but what we got is what we got right now. So make those bold. Coming down here, we're going to want to put borders on all these right here to make this into a table. And we are also going to want to put borders on here to make this one into a table. All right, and we're going to want to merge these since this is our account balance. Format, merge horizontally, and then center that text in the merged cell. And as always, we want to apply our conditional formatting to our profit and loss right here, just so that it looks nice and pretty. If we've made money greater than 0, we're going to want to make that green. Add another rule. We've been doing this the whole video. Hopefully you've caught on by now and are ahead of us for this formatting part. And there is the red. And I just accidentally formatted the text instead of the cell itself, the shading in the cell. Okay, thank you for bearing with me during that. And this is the data that we're going to be working with, right? So ideally what would happen here, and what we can do, is actually put an equal sign here, go to the weekly tracker, and link our net profit, right? So that'll show 172. And ideally, you're going to want to have all these linked to the weekly tracker. But since we don't have weekly tracker data on this spreadsheet for, January through April, we'll link that first one and then keep the rest of the data in as is. For your account balance, you're going to want to have what you started the year out with. So we started the year out with $86,000. And how do you get from 86 to 89? You know that it's going to be the increase in your profit or your loss during the week. So going back to what we had right here before we linked it, we would make this equals the 86 plus profit from the week, and that'll get you to your weekly account balance. And then actually what I'll show you right here is this goes down to 123.15. You could delete this, and the way this formula works, you could drag it all the way down and it'll get you right back to where we were at 120.15. So once you actually get the formula set up, copying it down is super easy. The year-to-date return is going to be calculated by equals parentheses current value minus your initial value. And what's important here is we're going to want to absolute reference the initial value. So we hit F4 and that'll put these $2 signs right here. We're going to want to close that and then divide it again by our initial balance, which again needs to be absolute referenced. And that can be copied down and these numbers are not going to change. So what does an absolute reference do? We could see when we copy formulas down right here, E2 and B2, they update, E3, B3, E4, B4. When we absolute reference, the non-absolute referenced cells update. So it'll go E4, E5, E6, E7, but the E2 remains constant. And we want it to remain constant because our year-to-date return is going to be based off this initial balance. So that's why our formula in these cells has that absolute reference. So that's what the account balance is going to look like right there. And then what I have out to the right of this is a monthly summary. To merge these two cells. And if you're using Excel, you could center across selection as well, because I think that's technically a little bit more correct and a better way to format that data, but I don't know how to do that in Google Sheets, admittedly. So this is what we've got. Again, we're going to highlight that a shade of gray. Type all of our months in there, and just to make this a little bit quicker, I'm going to copy and paste them in. So we've got January through December. So this is going to equal the sum of all the January months. And I exclude this one because that was a Sunday, so the week really started on a February. We're going to include all the February months. We're going to include all the March months. Same deal right here. This started on a Sunday, but the whole week really was March, so that's why we include that. And then we are going to include all the April months as well. So that is where we are year to date so far. We're going to finish this table out by giving it an outside border. And I actually don't like these individual lines here, so I'm going to remove all borders, put an outside border. I'm going to throw one down the middle here by giving it a right border, and then underlining this just with an outside border. And again, we could use our conditional formatting, but I think you guys know how to do that right now, so I'm not going to do that to save some time. And under here, we could calculate our year-to-date profit, which we know will be the sum of all of these right here. Make that bold, because that's really all that matters in what we're doing, the amount of profit we have made overall on the year. Below that, I like to break out what the all-time high in my account is. And the way that you're going to do that is with another formula. And then for our all-time high, it's simply just going to be the maximum of this range, E2 through E1000. And that'll show you that our all-time high has been $120,315. So if during the next week we got up to 122, that would then update again right here. But that is the way that this is going to work. So now let's get into creating our charts now that we've got all of this information input. So we're going to X this out. And what we're going to do now is we can start with our first, our account balance chart. So we're going to highlight everything for the entire year right here. All the dates, even though all the values aren't necessarily cleared up yet, we're going to want all the dates. We're going to go to Insert, Chart, and there you go. That's going to give us a basic chart. So it's starting to look like what we want, but it's not quite where we want it to be, unless you do like it this way. I mean, if you want it to be above 0 with 0 as the starting point, that's perfectly acceptable, and then your account balance is good to go. That's your chart. However, if you want to go into customize, you could customize the axis, you could customize the style, you could customize the vertical axis, which is what we're going to do, and we're going to put a minimum of 75,000 in there. And that means that 70 is where our chart's going to start. So whereas before, we had 0 in there, which is, still correct. It shows you how far above 0 you are. You can see your progress as it moves throughout the year. If you want to see a little bit more detailed view, because, from far away, you can't really see too much movement here, you could start it just above where your account started on the year, and you'll get a little bit better breakout of what that yearly account balance is looking like. So that's super simple right there. That's the account balance. If you want to add a chart title, you can do that as well in those same settings. But moving forward, now we're going to want the moneymaker right here. This is my favorite chart, our performance versus the S&P 500. And just based off the data that we have right here in this yearly tracking spreadsheet, we can't quite do that yet. So we're going to have to add a couple more tables out to the right over here. And what those tables are going to be first off, S&P 500 benchmarking. So SPY benchmarking, because we need a table to show the performance of S&P 500 during the year, and then a table to show our returns during the year. We're going to put those into one table and then combine them into a chart. And if that didn't make sense the way I just said that, keep watching and hopefully it'll all come together soon. So that's going to be S&P 500 benchmarking. We're going to bold this. This is going to be our entire table right here. Forgive me for not having that perfectly centered, but you know, that's not necessarily important in what we're trying to do. So again, to save some time, we're just going to copy and paste the actual values of how the S&P 500 has been looking this year. And this is what we've got so far. We've got the dates right here. I don't really like the way this is formatted with all these individual horizontal lines. So what we're going to do, we're going to take those out by doing no borders and then an outside border. And I think that looks a lot cleaner for what we're going for right here. And then we could also put an outside border on the header of the table right here. So as you'll see, these are all values, but one thing that you can do again, just to make this more dynamic and try to get this updating as quickly as possible, is equals that Google Finance again, SPY, and that'll fetch the S&P 500 closing price, which was 416.74. We're doing this over the weekend when we film this, so it's going to be the exact same as the closing price for the prior week. And then again, we're going to want to have this as a formula to show you the change, and we could actually go right back over to what we had here for our account balance because it's going to be the same exact formula. So we could copy that, we could paste it in, and you'll notice that there is one issue, and it's because we have these absolute reference formulas in there, referencing E2 instead of R2. So we're going to want to switch that to R. We're going to want to switch this to R, and then that gives you the proper 1.98%. You're going to copy the whole row, Command D, and that's going to copy that formula down to get you to where we are, where the S&P 500 has an 11.46% return year to date. Center that to make it a little bit more readable, but that's the SPY benchmarking chart. So now what we want to see here is returns vs SPY. And this is the table that we are going to create our chart down here from. So again, we're going to put the dates in. We're going to copy these in right there. And then we're going to want our returns. So I'll put HT and then I'll put SPY for the S&P 500 index. We know week one, there aren't going to be any returns because that's just the starting point on the year. We don't actually have any progress in the account until we get to the 10th. So this first row is going to be empty. But from there, we'll do equals for S&P 500, this cell right here, and that'll pull that in. And again, if we just copy down here, Command D, that'll pull all those values in. Go to the HT column, hit an equal sign, and clicking over on our year-to-date return for January 10th on our personal performance table, that'll also get us there. Copy the formulas down, and we now have a usable table that we could throw in here and give us the chart that we're looking for. And again, this just bugs me looking at an unfinished table, so I'll at least put an outside border on it so it doesn't look too terrible. Another one right here. Make that bold, and hell, we might even center it just so it doesn't look completely terrible. So now, keeping in mind what we did right here, we're going to want to highlight this entire table so we can see the whole year, not just the values that we have year to date. Insert, and we're going to want another chart. And as you can see, this perfectly plots exactly what we're looking for. There's not really any extra manipulation needed for these tables. It gives you HT and SPY. It tells you right here in the legend for the chart, our returns in blue, the returns in S&P 500 are in red right here. And as you know, the year progresses, this will automatically update. For example, just to show you how this would continue, let's say we made $5,000 this next week. Again, that gets formatted with the conditional formatting turns green. You know, nothing else updated. What just happened? And again, for May, we're going to want to have that equals the month of May. So you might say, okay, I put the $5,000 of profit in here. Nothing happened. Well, it's this simple. You're going to want to go to your account balance, go over, down. So you have all four of these selected, Control D to copy those down. You'll notice that pulls in your $5,000 of profit. It automatically increases your year-to-date return. The 125 is already automatically reflected in your account balance chart. But why isn't it reflected down here? And that's because that pulls from these tables over here. Let's say the S&P 500 goes up to 418 this next week. That's reflected right here with an 11.8% return. But again, nothing's showing up on this chart. But as you'll recall, that's because this chart pulls from this table right here. So same thing as we did on the account balance table. you're going to want to select all 4 of these cells right here, Control D, and right there, our table has automatically updated. And I'm now realizing as I did that this needs to be updated to 592 because our account balance has been updated to 59. So there's a little bit of an error right there for me, but let's say it goes up to 419 that week. Super similar, copy that down, that'll get pulled in. And you can see that the S&P 500 will be updated on that chart as well. So that's how you keep doing that. So what you would do on a week-to-week basis, you essentially copy this entire thing, move it down here. We could show you how you would do that right now. Easy as just copying, pasting, updating the prices, and then tying that new net profit to this right here. And as you can see, when we put new values in here, 2,500, that updates in the monthly tracker. It updates your account balance. Once you copy it down, that gets updated in this chart. You'll update the S&P 500. Let's say it went down that week right after. You'll update that as well, and then go to your table that your comparison chart pulls from. Select the 4 cells, copy them down, and this will keep continuing to update, so forth until you reach the end of the year, and you will have a completed account balance and your performance benchmark against the S&P 500 presented nicely in a chart on your yearly summary. So that pretty much is a good summary of how to go from a completely blank Excel document or Google Sheets document into a fully functioning tracker that you can use to keep track of your trades, track your break-even prices, individual trades, and then compare your performance to the S&P 500 during the year for benchmarking purposes. A couple other small things that I want to point out that are in mine that are not in the one that we had in this example, just because of a lack of information. One thing right here is this little X we've got right here in H4, and you're going to want to slot that in between G and I, which is between your returns and the S&P 500 performance. The reason we do that is because when we get into our spreadsheet, it takes us right to the top, right? This is week of 1-3, but if we want to get to April, current day, you got to scroll forever. That's kind of a pain in the ass. So what you are going to be able to do is put your active cell to A4, hold down Control, arrow to the right, and it'll hit that X and stop there. Arrow down, arrow left, arrow up twice, and now you're at the current week. So instead of scrolling as long as it takes me to get from the bottom to the top here, and as you can see from how we're doing this, it takes a decent bit of time. You could click A4, right, down, left, up, and you're at the current week. Saves you a lot of time. So that is really the only other small intricacy on top of me categorizing plays in here. That's something I just do for personal tracking preferences because, a lot of the plays that we run in here vary in the degree of risk that we're taking on when we enter them. Some are safer, as we've indicated, some are chasing premiums, and then some of them that we open our hedges. That's something personally I need to get a little bit better at, moving more into safer plays. So I've just added that out to the left, and you could feel free to do that as well when you are setting up your tracker. But all in all, that's how you get from the blank canvas that we started this video with about an hour ago. So if you're still watching with us, thanks for sticking with it. So from getting to that blank canvas to what we have right here. If there are any other things that we use to track, any other formulas that you see that might not make sense, feel free to let us know. We're always happy to share videos with you guys demonstrating how to create things like this and how to look at different scanners and different trackers and how we and the approach that we take to trading and analyzing our performance. So again, thank you for sticking with me if you made it to the end of this hour-plus video. That's all we got for this one. Feel free to leave any video suggestions in the comments, and we'll be happy to try to create what you guys are looking for. But until next time, this has been the Hourglass Trader, where as time passes, we make money.